There is one number hidden inside financial statements that shocked me when I finally understood it. It's not profit, it's not revenue, and it's definitely not the stock price. Yet this one number explains why companies that look strong suddenly collapse, and why entire economies freeze without warning. Most people never look at it. That's exactly why it's dangerous. People believe growth means safety. If revenue is rising, everything must be fine, right? History proves the opposite. Some of the biggest financial failures collapsed during their best-looking years, not because they were losing money, but because pressure was building quietly underneath. The number that changed everything for me is the relationship between debt and cash flow. Debt alone doesn't kill systems. Cash flow problems do. When debt grows faster than operating cash flow, risk multiplies silently. At first, nothing looks wrong. Headlines stay positive. Markets stay calm, but the system tightens. One shock: higher interest rates, lower demand, or global stress, and the cracks appear instantly. This exact pattern shows up before almost every major financial collapse: corporate bankruptcies, bank failures, debt crises. Borrowing is easy when money is cheap. It becomes deadly when cash flow slows, and cash flow always slows eventually. This number doesn't just apply to companies. It applies to countries too. Governments don't publish income statements like businesses, but the math is the same. Debt versus real cash coming in through taxes, trade, and production. When obligations grow faster than inflows, governments face only three choices: default, inflation, or currency devaluation. None of them are painless. This is why this number isn't discussed openly, because it exposes fake growth and borrowed stability. It forces uncomfortable questions. Can this system survive stress? What happens when conditions change? How much room for error actually exists? It's easier to focus on stock prices and headlines than structural risk. But in today's world of rising global debt, higher interest rates, and slowing growth, this number matters more than ever. The higher it goes, the less room for mistakes remains. And when mistakes arrive, they arrive fast. The most dangerous financial risks don't scream. They whisper. And this one number explains why so many systems that look safe on the surface eventually fail. If you understand it, you're early. If you ignore it, you'll hear about it on the news too late. Subscribe to EconoShift 2026 if you want to understand the economy before it becomes a crisis headline. Because the biggest financial shifts always happen quietly.